want to bring in former Shell Oil President John Hofmeister. All right, John, I know it's week to week, but what do you make of these numbers? Is there a sense maybe something's happening with all the rigs that have been taken offline and all of the CapEx projects that have been mothballed?
Well, I think it's an incremental change, not a big deal, small potatoes. But that's okay. The market is really whatever the market is.
A couple of weeks ago, there were like 10, 12 million gallons being built in gasoline. So maybe it doesn't speak to demand. I mean, does it speak more to demand than to supply, at least this shift that we're starting to see?
Well, on a week-to-week basis, you never know quite whether it's the demand that's drawing it off or whether it's a distribution of product that is going to stock local retailers with more availability. It's very hard on a week-to-week basis to recognize any trend unless you look at it over a period of months. And I think what the point you just made, that there is a decline in oil production, there will be a greater decline in crude oil production over the coming weeks and months, and I think that is going to settle the markets and start the rebound, because there will be a point at which demand exceeds supply. I don't think it's going to be in the next 2 months or 3 months, but maybe in the next 6 months, we'll see it not just on a U.S. basis, but even on a global basis. You know, John, so I'm not the worrier that day traders are when it comes to what's happening in the local markets.
What about Saudi Arabia blinking? They've got big deficits now. They're fighting a war in Yemen, and yesterday they said they're going to stop funding their foreign students in America, which is a lot, like 60,000 students. So, I mean, they're cutting back in a lot of places to keep this crazy war going.
Yeah, and they have to worry about internal dissent in the country as well. I think they're reaching a point, Charles, and this is just my opinion, only informed by my general knowledge and awareness and discussions with people from the kingdom, that they're really spending a lot of money to try to cripple Russia's economy and Iran's economy, and it frankly isn't working very well. And so Russia and Iran are not going to cave. There's going to come a point when the Saudis, I think, have to reverse the decision they made to so-called move for market share and instead start paying the bills that the kingdom is acquiring. Right. They have a huge social plan, as you know, and to be able to pay that, they need oil up in the pretty close to $100 a barrel.
I've got less than a minute, John.
Otherwise, they're living on debt.
And you mentioned Iran and Russia. Iran's selling its oil in euros now, and Russia saying, hey, you know what, and China buying oil from Russia in yuan. Does that mean anything that now we're starting to see major oil suppliers eschew the dollar?
Well, it's a discount, isn't it? With a strong dollar, this is a discount. And so the Russians and the Iranians, they need money. Whatever they have to do to make more money because they have bills to pay, they'll do it. But in reality, if you set back and think about this is an artificial market in any case, because if the big guys, the big producers like Russia, like Saudi Arabia, decide to cut back 3, 4, 5%, all of a sudden we've changed the equilibrium of the demand-supply relationship, and we've added, you know, lots of price into the cost of oil. So I think it's just a matter of time until people come a little bit more to their senses. They make a pragmatic decision that's in the best interest of their economic future, and it's always a contrived market. This is not a real supply-demand situation because of the arbitrariness of authoritarian governments when it comes to oil supply.
John Hofmeister, thank you very much. We appreciate it. You always put it in the proper focus for us.